Hello and welcome to the stock specific class here for Thursday, May the 13th. Quite a wild ride the last couple days. We had the bullish reversal day on Tuesday. It looked like the market was going to rebound from that, and then the big sell-off yesterday. And today the market's attempting to rally, but it's kind of fading a little bit here, and we probably have a little bit lower to go. I'm going to show you that, we kind of reversed today, but there's no support on any of the indexes where we reverse. And usually when that happens, it usually means that the rally is, you don't trust the rally. That probably has further to drop, and we'll take a look at a couple areas that we need to watch as far as how much further we could drop. It doesn't mean that we couldn't rally for a couple days, though, or attempt to rally, but it would likely be on lighter volume, and it'd be kind of that suckers rally most likely. So we'll take a look at that here in just a second. As far as the direction alerts, with the sell-off, we come way back. You see momentum has gone all the way to sell, dropped all the way down here. But we're not at extreme yet, so there's still some room for us to pull back a little bit further. Same with breadth. Breadth is not in the red, but we're kind of in the middle of the trending area. And then sentiment has come back down into the trending area as well. So. But again, we could rally a little bit from here, and it could move up, but we're not in an overbought or oversold condition or anything like that, any sort of extreme. And sometimes that's a little bit harder to gauge in the near term where we go, because we really could go back and forth, keep going back and forth like we've been doing over the last few days, and we could see a little bit more of that as the market and the market is trying to figure out, this inflation thing, and when it's trying to figure something out, it's the typical behavior is it goes sideways. It kind of goes flat until it can kind of decide whether the big institutional traders want to be selling or they want to be buying, and then that's when we're gonna, whatever they decide to do, we're gonna let them decide what direction the market's going to move in. We're not going to try to be psychics here. Let them decide, and then we're going to try to follow. So we're just hoping that the clues line up, that we can tell what they're doing. All right, let's take a look at the charts here real quick. You can see what I'm talking about. So here we are in the SPY. We dropped down to this area right here, but there's no real support in that area. The next support area is probably right over in here, about 398 or so on the SPY. There was a little bit of support right here, but we broke through it, and we kind of rallied up to it today as the intraday high, but we faded a little bit off of that, and we could rally up some more still, because this is where you get into. We have to make sure we're focusing on probabilities. Nothing can tell us absolutes, but you hear me talk about this all the time, that when you're in trend reversals, typically you'll get an impulsive down followed by corrective back up, and typically on your pullback, if this is a pullback for another move higher, it would tend to be a little bit more sideways, a little bit more choppy. Here's a move down, it tried to bounce, move down, and then it took off. Here is just basically one straight move down. You had the attempted reversal right here, but it faded immediately. So it still looks like one sharp move down. So what I mean by it could try to rally for a couple of days, we could see it maybe even rally tomorrow or attempt to rally tomorrow and then roll over. And that's what kind of creates that ABC pattern. And you can see right here, you had this initial move down. It tried to rally right here. Usually it's on lighter volume. You can't see the volume, but it's lighter volume down there. Bring that chart up a little bit. Try to rally on lighter volume, and then had another move down. You can see the volume for day, very light. We have a couple hours before the market closes, but it's going to be it's definitely going to be lighter than the last couple of days. Unless something dramatic happens at the end of the day. But then if something dramatic happens and the volume picks up, it's going to be selling. It's going to be panic selling that would drive it up. There's not going to be any panic buying right here. But that's looking like a kind of a sucker's rally. And like I said, it could last another day or two possibly, but they would probably be very weak rallies, weekdays, small rallies, things like that, before reversing. But that's the next support levels down there. If you look at the Dow, it had some support. It's kind of similar to the SPY, where it had some support that it broke through yesterday. Barely, but it broke through it. Right down here is a possible support area. Down here is a possible support area. But there again, you have impulsive down. You could probably bounce, and you probably have another move down still. Now the Qs, there is congestion in the area where it's at, or where it bottomed or kind of hit bottom yesterday. There's congestion into here, but when you line it up, there's really not a lot of support. Probably the support I would see would be right about in here, about 310, where you're lining up this support right here, or actually not that one. This support right here, this support right here, this support. That kind of all extends out. Resistance back in here. And then on the Russell, the Russell would be that neckline that we talked about right here. We're not, and actually the Russell's the closest to support, but that's probably where you'd look for it to find all those supports in that area right there. So that's kind of my outlook then for the rest of the week, and maybe going to the first part of next week. I would expect more downside. And one of the things that I was noticing yesterday too is that yes, there was some big selling going on, but there wasn't a lot of panic behind it, or there wasn't a lot of fear behind the selling. And usually when there's not a lot of fear behind the selling, you're not at a bottom, or that it's a real shallow sell-off, and buyers are going to jump, people are going to aggressively buy the dip. But in the context of what happened, I was expecting aggressive buying, because we had that bullish reversal the day before, and that's where you would have expected aggressive buying after that bullish reversal candle. The next day is usually when you see it start to really rally off of that, and when it failed to do so, it created selling pressure, but it wasn't, again, it still wasn't panic selling yet. So it makes you kind of feel like it's not done yet. But I've been in many situations where I felt like I had another move down, and usually what happens is in those situations, the buying starts, but it's really small, and it starts to build momentum, and it just kind of gradually works its way up and does end up going higher. But as you can go back and look at charts, most of the time you're going to get that kind of ABC or choppy look to the pullback. This one looks more impulsive down, and so I'd be willing to bet that we're going to get still another move lower. And I told you I can, in these updates, I can be flip-flopping from one update to the next, because, all I'm trying to do is read what the price action is showing. And just trying to, again, we're just trying to see what those big institutional traders are doing. The VIX moved up. It did spike up yesterday, and that was as a clue that you look for. But in context to other pullbacks, it really didn't move up as much it's been at very, very, very low levels. So it did spike. And I'm not saying there wasn't any concern in the selling. There was definitely institutional traders buying protected puts yesterday in the midst of that selling. But they weren't chasing it at any cost yet. And so, but when I talk about fear, boy, this is when you get into trying to read fear in the market. There's not really we use the VIX as a type of equation because it is calculating the implied volatility changes in those options, which is showing that usually, like I said, usually those big institutional traders aren't buying protected puts unless they feel like they need them. And if they really feel like they need them, they're buying them at whatever cost they are. So that's what really spikes that implied volatility. That's probably the closest thing to a calculation of trying to measure fear. The other is just the nature of the selling, the volume of the selling. You're going to see, so let me give it. If you watch the tape throughout the day, usually on an orderly down day, what happens if you were to look at like a 1 minute chart or a 5 minute chart, you can't look at a 1 minute chart on Traders Pro, but there's other charting services where you could get into an intraday chart on kind of an orderly selling day. What you'd see on that 1 minute chart or 5 minute chart, whatever shorter time frame you're looking at, is you'd see just a steady stair step. It's declining, and it's declining kind of all day long. It's just kind of just moving down. Maybe you'll get something, a jump at the open or something like that. So you see a sharp drop at the open, and then it'll be kind of just orderly as it keeps declining throughout the day. When you're in a panic sell-off, you'll see these large drop, attempted rally back up, and then big drop. It'll drop very quickly when it drops throughout the day. You'll see these big drops in it. And what it is there's no buyers. There's nobody. Everyone's selling. There's no buyers. So the price drops so rapidly until it finds a bid. They call it when it finds a bid, when it finds someone willing to buy it. And then that's what causes it to bounce a little bit, but the selling is still so strong it doesn't bounce for long. So you don't see an orderly move down. You just see these really sharp moves down. And we weren't really seeing that. Yesterday was a little bit more of an orderly decline. It did accelerate a little bit towards the end of the day, but it was a little bit more orderly. All right. So, can we look at some specific stocks to get into? There are some stocks that have pulled back a little bit. There are nice uptrends that you can look at. It could be the first to recover when the market recovers. And since we're waiting for that extra confirmation of the buy signal, that would help in case we have another move lower. You wouldn't get that buy signal yet. But another transportation, I've talked about this from the last couple updates. But Freight Car America, rail is a ticker symbol I like. And actually, this one looks like it should. I like the overall trend, but it looks like it should have one more move down. Kind of wave A. Here's your wave B, and it looks like it's might even starting a wave C. And that's okay. You just want to make sure that when it's done, that it has a higher low. So this is one you're kind of keeping in a watch list and waiting. You'd be waiting for that buy signal anyway. Let me switch this over to signals here. Probably has that one more move down, and then you'd want to make sure it has a higher low. And by the time it recovered to a buy signal, probably somewhere in this area around $7 or so, it could continue that trend. But it makes sense. A lot of the rail stocks should do very well. If we're talking about inflation, we're talking about an economy that's overheating, you're going to be moving stuff around all over the place, and these freight stocks are going to be making a lot of money moving all those things around. So they should do pretty well. They've already done pretty well as the recovery is kind of started. If you go under basic materials, these are going to be your a lot of your mining stocks, things like that. And this Resolute Forest Products, RFP, it's a ticker symbol, 97 strength rank. And it's rallied a little bit today, and that's putting in possibly a little bit of a higher low right here. Probably like to see it move up another day or so to really kind of confirm that, which we wait for that to go back to a bicycle anyway. But you've got a little bit of a triangle formation here, a symmetrical triangle, and you need at least two touches to create those lines. So here's the lower high right here. Here's the possible higher low, and it is a higher low because we are moving higher today. So that would, but like I said, you'd like to see it usually get back up above the top of that higher low candle right there to make it a little bit more legit. And then if it breaks out, it should have a pretty good run out of those triangle formations. Retail had a lot of stocks I liked. I've brought up L Brands before. They tried to break out Monday it was trying to break out right here. We had brought this up before. The breakout was this kind of sideways consolidation right here. It had a little bit of a false breakout, came back. You'd want to see it. You want to make sure it's going to hold this support area right through here. But if it breaks out again, I think this thing could run. So I would probably wait for the breakout, even if you get a buy signal earlier than that. But it'll probably be similar to this, where you get that buy signal right as it's kind of breaking out there. Another one in the retail sector, this is what I really like the pattern on, is American Eagle Outfitters, AEO. And it looks to be kind of creating that ABC correction right here. Nice little pullback off of the trend. And you're just waiting for it to go back to that buy signal. There's a question here. Can you move from sectors to individual stocks? I think we are looking at individual. Oh, do you mean you could look at some of the muscle stocks and some of those scans just to look for, skip the sectors and look for individual stocks. This is just what we do in the stock specific class is a specific process. What we're doing is we're looking for the strongest. We're looking for the strongest sectors, and then we're going in and looking for the individual stocks within those strongest sectors. And the criteria is we'd like to see a 98 strength rank. That's we have to move that around a little bit. If there's nothing that we'd like in that 98 strength rank, we can go down or up from that. There's nothing wrong with looking at a 99 strength rank or anything like that. I usually don't like to dip below 90. And these all have hold ratings. So you're looking for stocks that are basically in the strongest sectors that have pulled back a little bit. They've gone back to a hold. And then you're trying to look at and this is a good example of this. We're looking for the pattern, seeing if there's a nice pattern there in that pullback. So for instance, on American Eagle, if it had like a sharp drop and then it's moving. And I've done trainings on a lot of the stuff I talk about. If you go to YouTube and type in Traders Pro, there's a lot of I go over basic chart analysis and ABC patterns. And so if I'm using terms you're unfamiliar with, I cover all that in those trainings. You can get yourself up to speed on that. But if we get a sharp sell-off and it's kind of moving sideways, kind of like we saw on, I think it was rail that we were looking at, that I might not like it right away because it might have another move down. It might not be done correcting, or it might have just a real sharp drop that's gone. It looks like it could be breaking the trend. So I'm looking for the strongest sectors, the strongest stocks within those sectors that have pulled back into that hold category, and then I'm looking for the chart patterns, the chart pattern there, and then I'm waiting for this to go from, as soon as it goes from from hold to buy, that's the signal to enter. And again, there's other types of entry techniques you can use. There's other types of trade management techniques you can use, but we're just trying to follow just a real basic system in the stock specific class where we're not trying to overthink it. We're trying to make it real simple. Strongest sectors, strongest stocks in those sectors. But if you did want to look at just individual stocks, you can go into the muscle stock scans right here, and there's different criteria for, and you're just looking. But the thing is, you'll find a lot of these same stocks in these same sectors that we're analyzing here too. So you'll find that there's basically going to be doing the same thing. If you're having any trouble with the software, you'll have to contact the office on that. I can't see what problems you might be having with the software, or you might need some sort of upgrade to your platform, whatever that you might. I don't know what you might need, so you might have to contact them to get help with that. All right, one more in that retail sector is Restoration Hardware. Now this is getting down to a 92 strength rank, but again, kind of a similar ABC pullback here, wave A, wave B, wave C, and then you're looking for to start to move back up, go back to that buy signal. If it keeps dropping, then if it drops too much further from here, we probably don't, we're probably going to move on, and it could be in a trend reversal, which is in a downtrend at that point, and you wouldn't want to be looking to get in at that point. It also appears to have a bullish inside day, which is what we're going to be talking about today in the training. So let's move on into the training. Today we're going to talk about a candlestick formation. On Tuesday we talked about engulfing patterns, and they were great, some great bullish engulfing patterns that formed, and to be honest, they could still end up working out fine. But I kind of joked, and sometimes I don't like to joke because I end up jinxing myself, it seems. But I made the joke that watch all these. It's almost too good that some of these formations they're showing up, it's probably not going to end up working out. Because the thing about these candlestick formations is, just like anything, they're not absolute. They don't work every single time, but they work majority of the time, which is why we recognize them and like to use them. Today we're going to be talking about a reversal. We're still talking about reversal candlestick formations, but these ones are what we call the Japanese term for them is Harami, and Harami means pregnant in Japanese, or body within. And so when we talk about these candles, or we talk about the body of the candle, it means that it's inside the. So we are with the engulfing formation. If you had a downward move like this, you'd have an upward move that would engulf the day before. Okay, this is the opposite. This is going to be a reversal with the total body within the candle of the day before. These are also called inside days. You might have heard that term before, inside days. Now, these aren't the strongest. Well, I shouldn't say that. They're very strong reversal signals, but they usually need a little bit of confirmation. You want to wait to see what happens the next day to trade it. I sometimes jump the gun on it. just because they tend to work so often. They don't show up very often. That's one thing. So when they do, I don't always wait for the confirmation, but usually when you're learning about these, they'll recommend that you wait the next day to get the confirmation on it. Context is also important on this. Just like with the engulfing formation, you want to see it's because what it's showing you is a momentum shift. So you want to see a decline going into this. So this should be this big candle, bearish candle, should come at the bottom of a drop. Doesn't have to be a huge drop, but you should see it dropping for a few days or so before forming that final bearish move. The next day, it should be a gap up in a smaller body. Now, this is a really small body in this example here. It could basically want the body to just be contained within the day before. Now, just like with the engulfing formation, ideally, you'd like to have all the price action of this day contained within the body of the day before. Sometimes you'll get a little bit of an intraday low that dips a little bit below that body, or maybe maybe the inside day is up here a little bit, and the intraday high moved a little bit above the day before, or the body of the day before. Again, if you're talking to a real strict candlestick person, he'll say you can't have anything outside that body. But I've found that little tiny intraday moves outside the body, still the pattern still works, and works the majority of the time. So I don't get too hung up on that. Anytime you're doing any sort of analysis in the market, you can't be hung up on exactness of things, because just the market is chaotic and it doesn't always provide exactness. But there again, if there are big moves outside of the body, big intraday moves, it would tend to weaken the pattern. So I guess another way to say it is that there could be different degrees of how strong the pattern is based on, do you have these intraday moves that go outside the body of the day before? Is the volume, you'd like to see, I'd love to see higher volume, or high or decent volume. Sometimes you're not going to have higher volume than the day before, because that could be a flush out move on that final move down. And so, but you'd like to see good, you don't want to see really, really light volume on this, lighter than average volume. You'd like to see heavier than average volume if possible. And if not, I'm not saying it can't work, but it would make the pattern a little bit weaker if you don't have that. Okay. So this would be the bullish Harami or inside day. The bearish one, just the opposite. You're going to get an upward move. You want to see an upward move to it. And just like I said with the engulfing pattern, what if you have a sideways move and you get this? Well, it's a very weak signal there. It's in a sideways move. You get inside days all the time in a sideways move. It's not going to mean as much or be as strong of an indication of where that price action is going. So you like to have the context, if at all possible. And again, it doesn't have to be a huge move up, but just up for a couple of days or so to see a directional move. You have the big bullish candle that's followed by a smaller bearish candle that's inside. And it usually signals a reversal. And as I talked about on Tuesday as well, all these price action, all these candles are reflecting very short-term direction. Meaning all this is saying is it should move down tomorrow or the next couple of days or so. It's not saying you're going to start a big massive drop. But if you can combine it with some other analysis, like I said before, let's say you have a move down and you get a bearish ABC pattern right here, and in that C leg of the ABC pattern, it's been moving up right here. You get a bearish inside day or Harami. And in the context of the fact that you have this big move down, this looks like a correction within that move. You get a bearish Harami saying that we should be moving down tomorrow or immediately. You could draw a conclusion that you're about ready to start a much bigger move down, because that larger context, the larger trend context is suggesting a much larger move down. So when you can pick up on all these little clues, you can start to piece them together with all your other analysis and create larger expectations. And so, but this is very helpful again for timing. If you have an expectation of a larger move down and you're just waiting for a signal of timing of when the price action is suggesting a reversal, it can become very helpful, and it makes you feel pretty confident when it works out. Sometimes to the extent where you think you're psychic and you think you know what's going to happen next every time, and then the market always finds a way to remind you that it won't. I was probably a little bit too confident in that reversal on Tuesday, but that's what can happen sometimes when you expect that it's got to move in that direction. All right, let's take a look at some examples. Now, like I said, these don't show up very often. There are a few that I found from today that some are a little bit questionable, but we might be able to look at. And all I did was basically go through the Dow 30. But let's take a look at some of the ones for today. Let's look at Visa. Nope, Visa moved. Actually, it moved past it now, so it's not an inside day anymore. So, but that's it is a bullish reversal candle, but not the inside day. And let's see. Hopefully, all of these haven't just moved. All my examples haven't just moved. At least the ones for today. Ooh, that one's real close. This is Walmart. Yeah, you'd like to see the body smaller. So the market's rallied, I guess, since we've been chatting here for the last 30 minutes, but it was a little bit smaller at the time I was going over this. Let's see. There's Home Depot, and that same thing. It's getting real close to moving outside that body. We can look at some. Let's look at some that happened in the past where you can kind of see. Let's look at Verizon. And let's go back to April. So here's a little bit of an inside day, but here it had the extension up here, but this is where it gets kind of tricky. A little bit of an inside day right there. Darn it, that Visa and Walmart ones were really looking good, and then they really took off on me. Let's look at WBA. Here's a pretty good one right here. So here we had this decline at a bearish candle right here, and then look at this one was inside. Now again, this is where again it had an intraday low, went a little bit lower. It was a real compact day inside the previous day. Again, the real strict people will say you can't have a move outside of that at all. I just, if it didn't have a move below there, it would be a very strong inside day, very strong Harami. With a little bit of a move lower, that would weaken it a little bit, but it still doesn't mean it can't be a strong reversal formation. Had this move up. Here was kind of an inside day right here. Had a little bit of a, that was a little bit bigger. Can't move outside of it, but the body stayed within the body of the day before. They're in opposite directions. You see the move down here. Same thing. Here's a bearish inside day right here. That's what I'm saying. See, a lot of times you're going to see a little bit of a breach outside the body of that previous day, and if you just say, oh, but did that, it's no good anymore. Well, look at all these. They all worked. It's just that, you know, it would raise a little bit of doubt with it moving up there, but I'd still trade something like that, because like I said, they don't show up all the time. But when they do, they're pretty strong. A pretty strong reversal signal. There's a few more bearish ones here we can go over too. Let's look at 3M. And I'm going back here to January right here. It was a really big up day. Again, an inside day. Now the intraday high almost went above the top of the body of the day before, but it didn't. But it was all contained within inside. Another thing I like is volume. Again, it's not going to likely be higher volume than the bigger candle, but you'd like to see it at higher than average. And we did have that. It was higher than average volume that next day on the inside day. Again, all it did was drop. It really dropped the next day, and then it was right back up again. So again, these are very short-term signals. They're not they're not for the price action itself is not predicting longer term moves. It's if you use it in context with everything with something else, it could predict a longer term move. There's a bearish engulfing formation here too that dropped one day and then took off again. Procter and Gamble back in March. Right in here. And the big upward day, inside day right here. Again, had a drop, not a huge drop. It was right back to moving up again, but that was showing you weakness in that upward move right there. It pulled back a little bit off of it. Like I said, I use these candles a lot of times with option trades where I'm just trying to trade it overnight. You know, I'll see that formation, or just for a couple of days or so, I'll see that formation. This one I would have had to wait an extra day before it dropped. This next day it was still kind of flat. But like I said, you can go back and you can find examples. I can look for examples where it didn't work. You know, it's not guaranteed to work. Here's a little bullish inside day right here. And the intraday low dipped a little bit below that, but the next day it moved higher. Here's a little bit of bearish inside day. Dropped down the next day. It's also good to be able to recognize this as well. Is, you know, we're talking about, you know, profiting from a move like that. But a lot of times when I'm in a stock, usually for shorter term trades, if you're in a real longer term trade, you're not going to get too caught up with the day-to-day bouncing back and forth. You know, you don't want to be jumping in and out of it or anything like that. As traders, though, you are trying to jump in and out of trends. You know, but if I'm in a trade and I'm expecting that stock to go up, and you know, I've had this nice move, it's been great, I want to let it go as far as it wants to go, but then I see this bearish inside day, that's a great signal to hey, this is probably done. Let's get out, take profits right here. There's a high probability it's going to pull back. Now it may pull back, go right back up again, but guess what? I could jump back in again too. So I could take profits there, or you know, maybe I haven't. Maybe it's barely started to move up, and I get that inside day, and I don't have the profit I was wanting yet, but it was showing this thing could pull back. I can use that to go ahead and get out. So, you know, being able to understand the price action can help you with a lot of these other decisions you're making, whether to get into the trade or get out of the trade. And and that's why it's good to learn these. Be able to, and these are really easy to recognize too. It's not too complex. Let's take a look at another example, or AXP. Back in January. Okay, that was it. Hold on, let me turn the volume bars off. So here you had a little bit of an inside day right here. Tail, again, intraday low, a little bit below the body, but the bodies themselves were, this body was inside of this one right here. You got a pretty good drop off of that. Trying to see if I can find one real quickly here that maybe didn't work. I try to do that a lot of times, as you know, because if I could find something like that where it didn't work, I try to show it, because it helps you understand it's not absolute. Well, there's a bullish one right there that worked. Big down day, body contained inside, moved up from there. Can't remember what stock we were looking at. Stock, I think that had an inside day. Yeah, there's Restoration Hardware. So here you can see on Restoration, and this is a good one here. You got the downward move right there. The body is contained within it, and the intraday high right here is contained within the body of the day before. So that's a good looking inside day. And again, you can, the context here too, I point out this looks like an ABC pattern. It looks like you're at the bottom of wave C. This thing should start to move higher, and you're getting a bullish inside day. There's a pretty good probability that thing will go up. Now, I probably just jinxed myself, because this thing will probably end up dropping all the way down here tomorrow. And that'll be an example of one that didn't work then. No, but you can watch that and see if it works out. But that's what jumped out when it pulled up a chart like that. And so hopefully this was helpful. Like I said, we're going to continue to do this there's several more candle formations. Again, a lot of them are very similar. They're kind of predicting the same thing. Some of them are stronger than others, and so some of them, when I see it, it's like, oh boy, that's great. That really is good to see. Others, it's like, I could trade it. I could make something off it, but I may not be as confident in it. But so there's different degrees of effectiveness of the formations, but it's good to learn them all and to be able to recognize them. I don't care if you know the names. But if you can recognize the behavior from the price action, that's the most important. Some of these candlestick formations have Japanese names, and sometimes it's hard, or they have weird names like Hanging Man and Dragonfly and Doji. And I don't care if you remember the names, but if you remember what the price action should do, that's what's most important. All right. See you on Tuesday for the next market update. Bye now.